Breaking economic news, consumer inflation is out as the Fed starts day one of a tumultuous meeting. Chaos reigns on the committee with 5 out of 12 reserve banks wanting to hike rates, and we mean the last meeting in July. Labor market is even tighter today than it was in July. Maybe the committee will be briefed on this new development. The committee added the word "some" in last meeting's statement, saying they were waiting for some further improvement. The additional word was kind of a heads-up signal for "we are going in September," nod, nod, wink, wink. Well, are they spoofing the markets with delay, or are they going? The recession is over. CPI inflation out this morning, down 0.1% headline CPI in August as gasoline prices fell, and up 0.1% for core CPI inflation. On a year-to-year basis of measurement, CPI is rising just 0.2%, which looks a long way from the Fed's 2% inflation target. Today's CPI inflation data may make some at the Fed not have confidence that inflation will make it to 2% in the medium term, a reason to delay liftoff. Hopefully, the Fed economic staff, the staff with the leaked forecast from June saying liftoff would be in September, hopefully the Fed staff will brief the committee members and participants all that inflation has been held down artificially by crude oil falling from $100 last year to the $40 a barrel range in January, where it continues to sit. If oil doesn't fall any lower than $40, then CPI inflation will rise back to the core CPI year-to-year inflation rate of 1.8%. This will happen next January 2016, the inflation report due to be released in mid-February. Maybe the Fed should wait till 2016 to lift rates just to be extra cautious and to be absolutely certain. Come on, don't even pretend to think that. Inflation is a lagging economic variable. The Fed can't wait for it to rise, especially because they keep saying that they will move rates up extremely slowly in this cycle. There will be an interest rate cycle, won't there? What is going on with core inflation then? Just 0.1% in August, and we need to see some 0.2s in the mix to get people thinking inflation has a heartbeat. We had some bigger changes January through April this year, 0.2s, but now 3 of the last 4 months have been 0.1s. Any special factors behind today's 0.1% increase in core CPI for August? Not really. Used car and truck prices down 0.4%. And medical care services prices 0.0 today were part of it. Shelter costs slowed to 0.2% as well after rising 0.4 last month. Housing values are still rising 3.1% the last year, so you homeowners can relax. The housing bubble 2 continues, fueled by 4% mortgage money and the Fed's zero rates. Net-net, inflation is low today, near zero in fact, but that is not going to be the case for long. Core CPI inflation is running 1.8%. If you don't have a car, maybe you live in New York City, you don't have no inflation, and your savings account dollars are losing value fast. Inflation is down today, but it will be coming back up in early 2016 when the crash in crude oil prices drops out of the year-on-year data. Inflation is coming sooner than you think. The Fed is behind the curve at the moment. There is no way they are going to get the Fed funds rate up to 3% neutral in the next couple of years unless they start raising rates tomorrow. Keep your fingers crossed. A yes decision is closer than you think.